Every single day trader has losses when they're starting out, and I can tell you with certainty that 99% of my losses when I was starting was because I could not spot the divergence. So in this video, I'm gonna show you exactly how to enter every single one of your trades based on a divergence that's gonna give you a very high probability of success. Welcome back to the channel, everybody. My name's Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable on a consistent basis. If you guys have watched my previous videos, you guys know that I've lost lots of money in the Forex markets when I was first starting out. I didn't let those losses keep me from continuing my education and getting better and better day in and day out. Now I trade profitably on a consistent basis, and 99.999% of my success is due to spotting a divergence. Whether it's a bullish or bearish regular divergence or a bullish or bearish hidden divergence, I can see them every single time because it's all that I look for. So let's jump into the charts, and I'm gonna show you examples of every single one of these and how to trade off of the divergence. All right, first thing that you're gonna wanna do is get on the charts on TradingView. You can find a link down below to the website. It's tradingview.com. What you want to do is get on the cryptocurrency or the indice or the Forex pair that you trade most often and look at it on a 1 hour time frame. We're not going to put any other indicators on here except for the RSI, but we're not going to use the standard RSI settings. I want you to adjust them like I have. So click on the indicators tab and type in RSI. It is in the built-ins, it is the relative strength index. Put a star next to it. You want it on every single one of your charts and click it once. Once it's up on your chart, you're gonna see the indicator down here on the bottom. It's gonna look different than mine, but here's how you can adjust your settings. Click the settings wheel right here, leave the length at 14 and change the style. I like yellow because that's the color theme of the channel, so you can change your RSI color to yellow, and you're gonna change the upper band and lower band to 50 and 50, making it a solid line, not a dotted line. Then your RSI will look exactly like mine. The reason we're doing it this way is because looking at the market as overbought or oversold is the wrong way to trade the RSI. The RSI is a momentum indicator. It is showing momentum in a specific direction. Likewise, it also shows a loss of momentum in a certain direction, and that's where the divergences come into effect. So the first divergence example I want to show you is a regular bullish divergence. You can see that the price was coming down for quite a period of time, every single time creating a new lower low, all the way down to here. As these lows continue to form, my eye is always going to the RSI to spot a big fat divergence. This is how to catch a solid trend reversal. So as you can see here, the price created a lower low, but on the RSI level of this bottom was 19, and for this bottom, it was 21, meaning that the downwards momentum that the price action is showing is no longer valid because it's got a loss of momentum. It's higher up on the relative strength index. At this point, it started to reject and come up. Now, what I want you to do for entries is watch a solid rejection. This candle is too small for a rejection, so you want to wait for a subsequent candle in that direction. At that point, you can put in your order with a stop loss below the wick of this candle at the bottom here. Now, what I want you to do when you're first starting out is set your risk to reward ratio for a 1 to 2, meaning that your risk is 1 and your reward is 2. Once this target hits, I want you to close 90% of your trade, move your stop loss for the remaining 10% into profit, so it's a completely 100% risk-free trade, and let that thing ride until you're comfortable with your profits. Don't be greedy, take your profits when you can. If you're new, just take 100% of the trade right here at a 1 to 2. So that's how to spot a trend reversal with a divergence on the way up. Now, this is an example of a regular bearish divergence. You can see the price was climbing up, creating higher highs consistently, and then at this higher high, we had a rejection. 2 rejection candles off of this high. So again, my eye goes to the RSI and we see a lower high on the RSI. this is another divergence, but this divergence means it's going to go down. Again, putting in your short position here at the close of the second candle with your stop loss above the previous high, targeting a 1-to-2 risk to reward ratio. Again, once you get out of being a beginner day trader, you can continue to hold these trades depending on the strength of the movement. What I mean by that is seeing these big fat red candles shows a lot of momentum in that direction. But again, I want you to close 90% of your trade at your normal take profit level and then let the rest ride. So just to clarify, we had a higher high in the price action, but a lower high in the RSI. Now, there are two other types of divergences, and these are the ones, if you are new, I want you to only use these. They are hidden divergences. Now, the reason I say if you are new, because the number one rule in day trading and any Forex trading cryptocurrencies is the trend is your friend. Always trade with the trend. This is going to give you the highest probability of success. The issue is, how do you know if a trend is going to continue or reverse? That's when the hidden divergences come into play. So instead of waiting for a reversal, we are actually going to trade with the trend, looking for these hidden divergences. This is an example of a hidden bullish divergence. You can see that the price was making higher lows, but on the RSI, it was making a lower low. Now, let me explain how this works. The momentum was going up, correct? As it went up and started to come down, it became more oversold at this point than it was at this point, meaning that we are in an uptrend, but at this point, it is more oversold. So if something is oversold, it should continue up. So we get this big fat rejection candle, and these are the ones that are the strongest. Instead of waiting for two, you can trade just off of this one, go in for your long position, targeting the bottom of that big move candle and going for a 1-to-2 risk to reward ratio. Now, the other hidden divergence is on the downside. It is a hidden bearish divergence. The price is going down, creating these lower highs. Yet at this point on the RSI, it was much higher, meaning that the market at that point was more overbought than it was at the previous high. When something is overbought, that means some selling should occur. So that is your signal for the trend continuation down. And again, we got this big fat rejection candle, and you could have traded off of that on your short position, targeting the top of that candle as your stop loss, going for a 1-to-2 risk to reward ratio. Now, how much could you have made off of every single one of these trades that I just showed you? On this is Euro Australian dollar, and with this one move, you got 36 pips. On Australian dollar US dollar, which is the hidden bullish divergence, you would have gotten 41 pips on this one move. Now, the regular divergences that I showed you were both on indices. One was on US 30 and one was on the German 30. This one move right here, this 1-to-2 risk to reward ratio, got you a 100-point move on an index. Using a 0.01 lot size on this move, this is $100 profit with a $50 risk. On US 30, we had that regular bullish divergence. This is a 321 point move with a 158 point stop loss. So again, on a 0.01, depending on your contract size, this could have profited you $321, and that was just in a few hours. Now, all this analysis was done on the 1 hour time frame, and I suggest you do this on a higher time frame because these divergences hold more weight than they would on the 5-minute or the 1-minute. The concept still works the same on every single time frame. You just need to be more aware of the fact that there are more false signals on lower time frames. Now, when it comes to false signals, this is how you can actually prevent yourself from getting in on a false signal and waiting for more confirmation and more confluence using a trend line on these trend reversal trades. So it's only for the regular bullish divergence or the regular bearish divergence trades. I'm going to get rid of my order position right here, and what we're going to do is actually draw a trend line. I have a trend line drawn here to show you the lower low and the higher low on the RSI. But what we're going to do is draw a trend line on this price action. As the price is continuing down, it is maintaining a trend. So you draw a trend line across the tops of the highs, and once the price actually breaks through that trend line and you're getting the divergence here on the RSI, at this point, we've broken the trend and the trend is reversing because we can see that in the RSI with the divergence. So at this point is when you can get into your long position. Always wait for the close of the candle because the close of the candle is more concrete than waiting until it's almost closed because it could wick back down, being a false breakout of the trend. Again, let me show you this on the German 30. Drawing a trend line across the bottoms of the price action, you can see that once we broke out of that trend, we came up to retest, rejected down, and formed a new trend, causing a trend reversal, and that would have been your entry point. So you probably would have waited for this big fat rejection candle. Again, targeting your stop loss above the high of that candle. Also, if you guys are still watching this video, that means that you like the video. So make sure you're dropping a like down below. Every single time I see a trade setup, the first thing I do is stop and I don't click those buttons. I look for divergences and I look for breaks in trend lines. I look for regular or hidden divergences to see if my analysis was correct on that. You can see that I'm not using any other indicators except for price action and the RSI. So this is gonna be the ultimate bullish and bearish regular and hidden divergence lesson that you're ever gonna need. If you don't fully understand it just yet, rewatch this video a few times until you've got it implanted into your brain. Just trading this one strategy, period, is going to give you so much success and so much profits in your account, you will literally have your mind blown. And if you guys want to use this same divergence strategy, looking and trading a double top, check out this video right here. It breaks down exactly how to trade a double top. And if you guys enjoyed this video and you like the way that I teach, make sure you're subscribed to the channel by clicking this button right here. Thank you so much for watching, and we will see you in the next video.